Thank you. I'll call this meeting of the Lone Star College Audit and Finance Committee meeting to order. Quick roll call vote. Trustee Stoma.
I'm here.
Thank you, Trustee Stoma. Trustee Kane.
Present.
Thank you, Trustee Kane. Mike Sullivan present. I've asked Lone Star Police Department officer to lead us in the Pledge of Allegiance. If he'd come forward, please.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, with liberty and justice for all.
Thank you, sir. Oh, I'm sorry. Could you do the Texas flag thing while you're at it? I apologize. Thank you very much.
We're here, Alan.
Honor the Texas flag. I pledge allegiance to the Texas, one state, under God, one and individual.
Well, I've done that since elementary school.
Thank you, sir. All right, Desiree, could you certify posting of the Audit and Finance Committee meeting, please? Okay, thank you. Do we have anyone signed up for public comment today? Okay, thank you. No one has signed up for public comment. Next item, approval of the minutes of the December 6th, 2022 Audit and Finance Committee. Could I have a motion and a second?
I motion.
Have a motion by Trustee Stoma. Could I have a second, please?
Second.
Second by Trustee Kane. Any discussion, trustees?
No.
No discussion. Do just a voice vote. All in favor, say aye.
Say aye.
Thank you. All opposed, say nay. None opposed. The item passes. Next item on the agenda, discuss homestead exemption. Jennifer Mott is going to come up and walk us through this.
Thank you, trustees, for joining me this afternoon. I do have a presentation here to discuss the homestead exemptions. It has now been almost a year that as a board, we have been discussing the current level of our homestead exemptions. As many know, appraised values have been going up at a very high pace over at least the past year, if not longer. And with that has come this discussion around what level of exemptions we are offering our taxpayers. Towards this, I had done a presentation for the board last September as a workshop, just to give the background and sort of mechanics around exemptions. And then we discussed it again at the board budget retreat this past February. Today, I'd like to bring to you the administration's recommendation on homestead exemptions. I had hoped to bring it last month in May, but we had just received the preliminary values from the appraisal districts. So I appreciate the additional time that we have had to really analyze and do the calculations around those preliminary values. So towards these homestead exemptions, the brief background is, right, there are multiple different exemptions. Some are mandatory, some are what's called local options. Those are the ones that each individual taxing jurisdiction, ourselves included, it chooses whether to offer the exemption and at what level. So the homestead exemption is one of those local options where we choose what level of this exemption we wish to offer our taxpayers. This first chart here shows you where all 50 Texas community colleges stand on the homestead exemption. Here, out of the 50 community colleges, only 13 offer this homestead exemption at all. And you can see we are on that chart. We are among the 13 that does offer this exemption. I will note, though, you can see from this chart that while we are among the 13 that offer this exemption, we are certainly towards the lower end of what level we offer it at, which is at a 1%. It's the greater of $5,000 or 1% of your home's value is the level that we offer. So this chart now, I'm really zooming in a little bit more on just those 13 community colleges that do offer the homestead exemption. Again, you can see the level of the exemption itself, we are towards the lower end among the 13 at 1%. Part of what I additionally wanted to show on here, though, is also the comparison of each community college's tax rate. Many of the 13 community colleges do offer the full 20% homestead exemption, But all of those community colleges are at a higher tax rate than where we are. So with that, I wanted to get to our recommendation where first I want to say we had 3 goals set out for this. The first goal being we did want to look at increasing our homestead exemption because admittedly we see the 1%. We see that that is lower than what others are offering on the homestead exemption. In addition to that, though, I also showed how even among those 13 offering this exemption, we are among some of the lowest in the tax rate, and we would like to stay that way. So we would like to also decrease the total tax rate as a second goal. Finally, right, everything is a balance here. The first 2 items is in consideration of taxpayers. We, at the same time, want to continue to strengthen the fiscal position of Lone Star College. So third, what we'd like to be able to do is also balance all of these choices with continuing a second year of early debt payments, right? So far each year, we certainly make our minimum required payments, but this current year from the budget the board adopted last August, we are also making early payments ahead of time on our debt. And we would like to do that again if the board agrees with this recommendation. So that's what this slide is showing, those 3 goals and how we'd like to achieve that. So first in the chart, I'm showing just a base case of no increase in the homestead exemption. And then on the very right side is where our recommendation is, the increase in the homestead exemption. The recommendation is to increase the homestead exemption by 7%, which would bring us to a total of 8% homestead exemption. Now, what this would allow us to do is to keep currently our tax rate this year is at 10.78 cents. The proposal, and I will talk more about this in the budget workshop presentation that's later this afternoon, is recommending to decrease the total tax rate to 10.76 cents. So those 2 things hit the first 2 goals. And then with that, that would also allow us to still pay down early about $12 million worth of debt. If we did not change the homestead exemption, we could pay down 23 million. I didn't actually even run this scenario, but if we had kept it at the 10.78, I'm sure we could have paid down slightly more than 23 million. But again, that's only achieving one of these 3 goals. So really trying to balance the interest of taxpayers and strengthening the financial position of Lone Star College is what is driving this recommendation. So I do want to note with this, right, we are making this recommendation and the board does need to vote this month. This is based on just preliminary values from the appraisal districts. The timing of it is that this is the month that the board does need to make this vote. But it is based on estimates. We do not receive the final certified rolls until usually around the end of August. So some of this may shift come the fall when it is actually time to vote on the tax rate. But per the state legislation, the board is required to vote to adopt any changes in the homestead exemption by the end of June. So this is the best information we have at this point in time, and it's assuming a 10% growth in taxable values. Yes.
Appreciate the chart. So that I'm clear about 2 definitions. You've got the no new revenue and the voter approval rate. Can you tell me what the formula is for each one of those?
Yes, I can summarize it for you because it is quite a lengthy worksheet from the state that we have to complete. It looks very much almost like an IRS tax form with multiple lines with directions on each line. So a lot does go into the calculation, but the concept of it is in the no new revenue, maintenance and operations tax rate. The way we calculate that is we take how much in property tax revenues did the college bring in the prior year? And now on the current year's new appraised values, what tax rate would you need to charge to bring in the same dollar amount of revenues? That's why it is called the no new revenue rate. generally what happens is each year appraised values go up. So that means, but really by definition, that no new revenue rate goes down each year because you're bringing in the same amount of revenues. So that's the no new revenue rate. And then from there, you take that rate and multiply it by 1.08. So you increase it by 8%. And that's what gets you the voter approval rate. So for the college to propose anything above the voter approval rate automatically goes to the voters to approve.
Okay, so did I hear you say then you take the no new revenue rate multiplied by 1.08, and that's your voter approval rate? Okay,
Yes.
all right, thank
And
you.
both of these are just on the maintenance and operations rate. So that's how you calculate that portion. And then we also have the debt service rate, which is the INS rate. And then, so once you have both the INS rate and this maintenance and operations rate, the rate that you propose, the combined total is what our total
Right,
tax rate
Right.
is.
thank you.
Mhm.
Is there an exclusion for new construction though?
There is, yes, so that the no new revenue rate is really just on existing rolls, not new construction. So tax revenues can increase by more than that 8%, but when it does, that additional amount is really just from new improvements. Now there too, and I've noted that on the slide, that is where we have had to make an assumption there. When we receive the preliminary values from the appraisal districts, they just give us an estimate of the overall increase in the tax roll. They do not have it broken out for us between the existing rolls and new improvements. So the 10% overall increase, we have applied that same 10% to new improvements. So we have had to make assumptions in these estimates and in bringing forward a recommendation.
Thank you.
So based on the numbers as we have it today and this recommendation to increase the homestead exemption up to 8%, that would result in a voter approval rate of 7.88 cents. So the proposed M&O rate that currently we would contemplate for next year is 7.88 for the maintenance and operations, and then another 2.88 cents for the debt service portion. And that's what would bring us to the total of 10.76 cents for the overall tax rate, which is a reduction from this current year, 10.78. So that is the administration's recommendation.
That's the end of your presentation.
That is the end of the
Do you
presentation.
have some people with you?
I do, yes. Thank you. And I do want to thank so much. A lot of work has gone into this. I mentioned the estimates that we've had to do from Treasury, Diana Garcia, Jessica Leffingwell, Donna Hammett, Maura Kappa, and Nissa. They have done so much work towards this. We have had late nights and certainly even some anxiety over some of the estimates, some phone calls to the appraisal districts to see if they could give us any more data on especially the new improvements. So a huge thank you to the team that has worked on this.
Sure, you bet. I have some comments, but I always like to defer to colleagues first.
I'm good. All I can say is good job.
You said it was, this is a result of good fiscal management.
It is a result of excellent fiscal management. I just can't imagine why other folks can't do this. I mean, can't manage your business well. And you and your team and ladies, I give you my applause. You do a great job and keeping us going and keeping us ahead of the game. So thank you, thank you, thank you.
It's a win-win because not only are you going from 1% to 8%, but you're going from 10.78 to 10.76. The other thing I like about it is that I think it's a very reasonable and a very appropriate number to go from 1 to 8. Because from the standpoint of, particularly from the standpoint of state funding, from one legislative session to another, you never know exactly what's going to happen. Sometimes there have been flat years and sometimes there have been major cuts. So this still gives us some room to operate in a worst case scenario.
Yes.
Thank you. I have a question, a couple of comments, and then I want to ask my colleagues if they're comfortable taking this to the next step, which would be a recommendation to the board. So kind of a softball question, but still want to make sure we get it on the record. And that's if you could walk us through the difference between the discussion in Austin right now that's going on about homestead exemption increases versus what we do here at Lone Star, because the public may pick up the paper one day and see a large number and go, they said, and it may not apply.
Yes, we have definitely been following that this legislative session as well, wondering if it was going to impact us. At the end of the day, it has been, the discussion in Austin really has been focused on the ISD tax rates. Like I mentioned, the homestead exemption currently, it's a local option. So even though the state has put it in legislative code as an option, it is up to each individual jurisdiction to offer it. So early on in the session, there was definitely some discussion around bills turning it into a mandatory option, but that was the discussions. Where it ended at the end of the day was even just the other day with the special session, it was Austin looking at buying down tax rates, either the overall tax rate or raising the homestead exemption. But in either case, it was specific to the tax rate of the independent school districts, which their tax rates are always, almost always the highest on all of our tax bills, certainly higher than ours. For context, our rate currently is at 10.78 cents. ISDs are basically always over $1. Conner ISD, for example, I believe is around $1.17 compared to our 10.78 cents. So in terms of Austin discussing taxpayer relief, whether they did so through impacting us or just the ISDs, it would flow to the taxpayers in a similar fashion. But I think with that tax rate being so much higher in ISDs, that's where the focus of the discussion was on ISDs tax rates.
Good, thanks for clarifying. Now, when this discussion first started with the board, it was, if I remember correct, it was just around increasing the homestead exemption. So you've taken that charge and expanded it to include decreasing the total tax rate, which we did not say to do, nor early debt pay down, which we did not say to do. And you've brought us what we asked for plus additional. And I think that's extraordinary because I didn't think of these other two. And I'd like to think I'm smart enough to think of those, but I didn't. So thank you for bringing that information to us. It makes us smarter. And as Trustee Stoma said, it's a direct indication of the quality stewardship that you and your team have done with the system since you've been here. I don't say that lightly. I say it very sincerely because it has a huge impact on what we're able to do. If you don't manage it right, we have nothing to run. Not that we run it, but we have no policy to implement. Let's put it that way. So to each of you, thank you. And I mean that from the committee, and hopefully the board will be as appreciative as we are. But this is really impactful and it makes a difference. And I appreciate what you brought to us. I think we don't take a vote on this item, but does anybody have any reason they would not wholeheartedly support this?
I think we need to make this recommendation to the full board for approval.
Okay. The chair said it, and I don't disagree. So
I
Trustee Kane.
Totally agree.
Okay, good. I think you have a deal to the extent that we can make a deal.
And I will mention that that if the full board wishes to adopt this recommendation, it is on the board agenda for the regular board meeting that is this evening.
Great.
I'm so aware.
Good.
Yes.
Okay, if there's no further business to come before the Audit and Finance Committee, we'll stand adjourned. Thank you again.
Thank
Thanks
you.
again. Thanks, ladies.